All right. Hello, everyone. And thank you for joining the call today. And a special thanks to our LPs who submitted the questions in advance. And of course, to the Revterra team, Ben and Patrick, for being here with us. Ben is running a little bit late, but there's 5 to 10 minutes of other stuff that we have to cover. So we can go over that. And then will join momentarily. So for today's call, here's what you can expect with the next an hour or hour and a half. First, we'll hear from Ben and Patrick, who share about their backgrounds and what their journey has been throughout the past couple of years with Revterra, both from technological point of view and the commercial and business perspectives where they stand today. And after that, we'll move into a set of questions which were submitted by some of you, some of the LPs, to cover recent developments, technological advancements, competitive positioning, customer alignment, commercial and licensing landscape, financial backdrop, and the overall sort of the vision for the company leading to an exit. But before diving into the details with Ben and Patrick, I want to take a few minutes to step back and talk about the macro picture. It's something that I track closely every day. I spend a lot of time on that. And as investors, it's critical that we understand not only the company itself, sort of on the micro level, but the broader environment in which we operate. And in this case, taking a closer look and a wider look at everything that's unfolding across AI or energy or economic digitization, industrialization, electrification, that really helps to sort of appreciate the landscape and as well as how Revterra is such an important piece to the puzzle. We all talk about it. AI has taken over every conversation in business and investing today. I live and breathe this world every day. And what's fascinating is that not just the technology in itself, but how this one technology is enhancing every other technology, and of course, all the other industries. And we're no longer just talking about the winners from the internet time period, which were mainly two, I would say. Besides, I'm going to let Ben in as well. Give me 1 second. Great. Welcome, Ben. We were
Hey,
just
Max.
starting with a little bit of macro discussion, so we'll go over that. We just kicked it off, and then we'll get into the introductions and the Q&A for the rest of the call. So I was just talking about how the AI in this new development of AI, we're not just talking about the internet winners, which were mainly the enterprise SaaS and the social media or the Googles of the world, but looking at the companies which were able to extract an amazing amount of value out of this. But even the industries which barely extracted any value out of internet compared to what they can actually do from AI, whether it's healthcare or manufacturing, construction, the foundational science itself, the defense, law, and now we're talking about agentic AI. We're talking about the world model by Fei Li and some of the other ones, and moving the entire financial market, whether it's stocks and bonds and contracts, everything on chain. So Wall Street is trying to rebuild itself on chain as well. And then you look into autonomous driving or autonomous mobility, humanoids, all of this runs on one thing, and that is electrons, and that is the energy. And if there's one thing on which both the aisles or both sides of the aisle align on in Washington, then besides containing China, then that would be the energy security and the infrastructure build out. So no matter what happens to the government, this alignment creates a massive tailwind for companies like Revterra. And from an infrastructure point of view or from an investment point of view, massive value has been created already, both in the private and the public markets on the infrastructure side of the AI, which is the chips and the servers and the data centers. But the real value will be created sort of on the next layer in the application side or the derivatives over the next 5 to 10 years. And I came across a really interesting data point, and I would love to share that with the LPs and everyone on the call, is that during the internet era, for every dollar that got invested at the infrastructure layer, which back then was only one on the hardware side, which was Cisco and some of the networking companies, 20 to 30x or $25 were created for every dollar value invested into the infrastructure layer. 25 to 30x was created on top of that. With businesses like Google, Amazon, Facebook, Salesforce, Microsoft, and so on and so forth. And if you assume the same 25 or 30x multiple on everything that's been invested right now at the infrastructure layer, which is basically two. One is the GPU side of it with NVIDIA, and then there's the software side of it, foundational models, which is the chat GPTs of the world. Then there is a potential to create 25 to 50 trillion over the next 5 to 10 years. And it may sound a little bit exorbitant, but if you think about it, the global GDP back in early 2000 was a little over $30 trillion. And today it's 115 trillion. So we have grown by 4x from 30 to 115 trillion just in 25 years. And every technological advancement happens in a much faster pace, and the number of years in which it matures, it reduces or shrinks down. And so if you apply even just 4x multiple on that, there is an easy possibility of creating somewhere around $100 trillion worth of global GDP. So I wouldn't be surprised if we can go from 115 trillion and just double to somewhere between 200 and 250 trillion over the next 10 to 15 years. And that sounds like a really huge number, but we have already covered that if you look at the global GDP chart itself. But one way or the other, the scale of the compute and the power demands behind AI are like nothing we have ever seen before. And from a venture point of view, the compute and the model layers, the value has been extracted there already by the giants like the NVIDIAs and the Google and OpenAI and all. And that window from private side is more or less closed. But the layer that's coming, or the next frontier that's coming right now, is the energy. And that's where, whether it's the production or transportation, storage, stabilization, energy efficiency improvement, that is yet to be built to the same extent as the other infrastructure layer was created at the NVIDIA level. And that's why, sort of we backed even Blacala before this, which was on the energy production side. And now we're looking into Revterra, and we've decided to invest into that. And, besides the whole idea if AI is a bubble or not, there's one thing that people have also sort of casted doubt is if the decades old energy infrastructure is even enough to sustain that. And that's one of the biggest problems. And the grid we rely on today is fundamentally outdated. And somebody recently joked in the media that it's something that Edison would recognize. Obviously a joke, but not far from the truth. And Revterra is such a great and timely opportunity in that sense. They're solving this energy bottleneck. They're not generating electricity, but they're stabilizing it for the sound purposes of the AI workload fluctuation. So they're providing the picks and shovel to the AI industry. And if you look at the numbers are just astounding. I mean, I was surprised to find that for every 100 megawatt plant every year, they spend $100 million in just battery replacement. So for every megawatt, there's $1 million of expense that goes into just battery replacement. So over a 20-year lifespan, that's $2 billion. Whereas Revterra comes in with a $50 million one-time cost with no maintenance cost, and that's 95% cost saving, which is nearly like 40x return with a 6-month payback. And the other part is there is no dependency on the supply chain from anywhere else outside US. So there's completely zero global supply chain dependency. And it's all made in USA, 100% US made. In Houston, they already have a facility that can handle up to 150 to 175 units production per year. And with the additional facility on which they have the option to purchase, they can go up to 375. And that is more than enough to sustain the revenues that we have projected for the next 3 to 5 years. And the other beautiful aspect of this is no matter where the energy comes from, whether it's nuclear or natural gas or solar or wind or coal, you always need stability. So Revterra is providing the power quality, reliability, and the cost control. And the last thing I would talk about is probably this team strength. And I've looked at lots of companies coming out of Houston as well. Many focused on the energy management or sort of on the decarbonization side, where the business model itself is decarbonization. But most of those fail to scale because they're really great experiments at the lab level, but they never translate or scale to the commercial level. But Revterra is actually solving a real problem with a real solution, with real economics behind it, and with sort of grounded in what's happening on the ground right now, and not just buzzwords. And they have, as a team, Ben, Patrick, and their leadership, they have obviously Ben has done his postgraduate and postdoctoral in superconductors and magnetics. And then you have Patrick. He brings in the financial know-how as well as the operational understanding of the industry itself. And I might be biased. The two other leaders, they are from my alma mater, Baker Hughes. I've had always great respect for that. So it's a really good combination of technical depth, operational maturity, and sort of the clear vision behind it. And no matter how I looked at it, the market opportunity, which by the way, the cliche to quote, but Tam Sam Sam, the way we looked at that, it's so much bigger than what we have considered, which was simply just US only and data center market only. But the opportunity is so much bigger than that. We saw the same conviction in with the Kala, and I was really glad that our investment got validated when Oklo, the public company, came in the round just a few months after we did, and a week before we closed our round to create the first transatlantic partnership in the nuclear space, nuclear SMR space. So that was a really good validation behind all the study that we had done, and the same I believe with Revterra, which has a really huge potential to deliver a strong return for our investors. So with that, why don't we dive in and maybe Ben and Patrick, please take your time as much as you want to take time to set the stage about your journey, what brought you to this point with the Revterra, how it started, how it's going, and maybe Ben, do you want to kick it off?
Sure. Happy to kick it off. So it sounds like you want kind of a general background and overview here. So started working with the company full time in 2019. That is when I was able to get some seed funding from some angel investors here in Houston. Um, Shortly thereafter, I was able to get some grant funding from the National Science Foundation. So that combined was put towards building a small benchtop demo unit, which was a quite small scale flywheel energy storage system, um, integrating some of the new kind of technology concepts that we have developed and patented. And then after that, we were able to raise some funding from venture capital firms in 2022. That was a Series A, and that was really geared towards scaling up the individual unit size to what we deemed to be a commercially viable size from a unit economics point of view, from a transportation point of view, um, logistical point of view. We decided on this 2 megawatt, 100 kilowatt hour kind of unit size. Also, from conversations with the customer segments that we've been talking to, we felt like this 2 megawatt size made a lot of sense and really focusing on the high power short duration, like you mentioned. So the past few years since we raised the Series A really has been focused on the technical development, the product development, and getting it from a really small scale module that was kind of like a benchtop demo to this fully commercial scale um, system that we've now run the majority of the mechanical, rotor dynamic, and thermal testing on. And there were several kind of moats that we've developed along the way, both from, like an IP point of view. As I mentioned, we have several patents and multiple others pending, both domestically and internationally, but also just from an in-house know-how point of view. So there's a lot of kind of technical challenges and know-how that go into building and assembling something of this scale. Just to give you an idea, the actual rotor that stores the kinetic energy in our system weighs about 15,000 pounds. That is actually assembled by us here in our facility in Houston. And so there's a lot of kind of know-how that we've developed in being able to assemble that in an accurate and repeatable way. That doesn't all necessarily go into our IP, but it builds a moat um, around what we're doing and makes it a little bit more difficult for others just to immediately replicate it right off the bat. So that's kind of the progress over the past few years of the company. In terms of myself, my personal background, as you mentioned, um, my background was more on the academic side of things. Before joining the company, I did my PhD in physics. I did a couple of postdoctoral fellowships in physics, kind of basic materials physics. I did a lot of hardware development during that time as well, building new setups to test low temperature material qualities. And that also fed into a little bit of the background for starting the company. So I don't know if Patrick wants to give a little bit of a background on his end too.
Yeah, sure. Happy to do that. So thank you very much for the introduction there, Haas. Completely agree with all of the things you were saying. Obviously, we see that this is an incredible opportunity. And as you hinted at, my background before joining up with Revterra, I was primarily focused on financial and kind of business aspects of the energy ecosystem. Worked for many years as a sell-side equity research analyst. And over that time, really started getting obsessed with the trends that are driving electrification, power quality, all of these sorts of things that are going to be the critical inputs to industries just about across the board. So we see this as an amazing opportunity to kind of move and shepherd this space forward and keep everything resilient as we're going about doing it. So as an equity research analyst, was primarily focused on yeah, sorry about that. Let me see if the correct mic is selected here, or bring it a little closer to me. So I was primarily focused on integrated oil companies, downstream refining, and then most recently working with the renewable space. So covered the spectrum to across wind, solar, and battery energy storage. It's really this last piece that got me incredibly excited about how we generate, store, and utilize electricity. And that's ultimately what led me to join forces with Ben several years ago, about 4 years ago at this point, after we met through a connection at Rice University. So excited to hear all the questions you guys have prepared and obviously get into the discussion a bit more here.
Got it. Thanks for the introductions, guys. Let's go into the questions, and perhaps best to start with the recent development. So one of the questions that came is started with the congratulations on winning the ADNOC award out of the 650 submissions globally. That's a strong validation of your technology and alignment with major energy players. Could you walk us through the ADNOC partnership since winning the $1 million award in 2023? And what were the key outcomes from that? What's the current level of interest from ADNOC and moving from the award to the commercial deployment?
Sure, I'm happy to take that one. So the award you're talking about, we won in a competition at the COP28 climate conference a couple of years back at this stage, or about maybe a little over a year ago. That conference, as you suggested, we won out of a very large pool during a major pitch competition, and ADNOC was particularly intrigued, not just in the application that we were discussing with them at that point, but in the technology more broadly. So since that time, we've been working hand in hand with them basically every single week since then in working towards implementing our very first project, as well as expanding discussions on how we might apply the technology within their broader industrial portfolio. Obviously, major energy firm here does things all the way from electrified mobility to large industrial installations across the energy landscape, as well as things that are starting to actually touch on the AI data center space as well moving forward. So we've had an incredibly high level of interest from them across that entire business that they run. So at this point, we're planning to deploy our first project sometime around the middle of next year. And we're already a good way through all of the technical implementation, planning, site work planning, all of this sort of stuff. And the intention here is to use our technology to support a high powered EV charging installation. So we're helping them to prevent issues with power quality, offset peak demand management, and keep their costs low, potentially use it for infrastructure deferral on other EV charging sites as well. But this is really the arena for just the first application. As I mentioned, we see an incredible amount of opportunity to expand the relationship with them as we move beyond this project. And I think everything is continuing to move in the right direction with that relationship, and we're very excited to keep doing it.
Got it. And one of the things I probably want to mention something here, and also maybe if you can follow up on that, I was listening to Google's ex-CEO Eric Schmidt. I think he was in Middle East recently and talking about all the developments that's happening on the data center side as well. And one of the things he brought up is that the cost of energy production is obviously really high in Europe, and so one of the things European countries should look at, and I think France has already done that, is create a partnership with Middle East. I'm not sure if it's Abu Dhabi or Saudi Arabia, but one of the sort of the locations in the same vicinity for the data center application, which is obviously US has its own infrastructure. Europe, it's difficult. The cost is high, but they're close enough to Middle East to get it from there. Is this something that ADNOC has discussed at all, or have you seen such kind of an interest in that region? And by the way, ADNOC, are you looking into this partnership with them for placements in the Middle East, or is that more somewhere else?
I can't say specifically on ADNOC's behalf whether they're looking into any deals like this, but I will say that we have heard of many of these large players, exactly as you suggest, looking at building sites over in the Middle East for usage across the broader landmass and pushing that data center activity for usage in Europe as well. So I think you're exactly right on trend there, and we think there's an amazing opportunity because both the infrastructure costs in terms of build outs, materials, et cetera, tend to be lower, and the energy costs tend to be much lower. So I think that's a really reasonable thing to expect, and a lot of our discussions seem to be pointing that direction. Though I can't say anything too specific at this point.
Understood. Moving on to the technology side, assuming that technology itself is not a long-term moat, what is Revterra's defensible edge?
Ben, do you want to talk a little bit about that?
Sure. Can you clarify a little bit more what you mean by that, Haas?
I think what they're trying to find out is all, you have, and maybe it sort of relates to the other question as well, sort of ties to that. But, the how difficult would it be for other flywheel or fast competitors to replicate your performance metrics? Because the gap seems large today, but how long before others catch up using similar magnetic advances from the nuclear or the defense space? Because you've obviously created this application with the superconducting magnets and whatnot, and a lot of that research also came out, or maybe at least the cost advantages came down from the nuclear side as well. So assuming that technology mode eventually gets negated within 2 or 3 years for most of the companies, which rightly so, it should happen, it always happens, what will give Revterra a defensible edge over a medium term, at least, if not 10 years, then maybe at least 5 years?
Well, I think there's a market timing aspect to it as well, in terms of where we are right now and the discussions that we're having, with the initial pilot customers that we're talking to. So yes, another company can come in and work on doing something like this. I would say that it does take a long time to do it. So let's say it takes somebody a few years to do something like what we're doing. I mean, I think you really are missing a big chunk of the market timing if you're not getting in until a few years from now. At least that's what we're seeing, and that's why we're trying to move so quickly, is because a lot of these very large data center sites are scheduled for construction in like 2027. And the discussions we're having right now are to actually get into those 2027 sites on the
I
initial
take
phases. Yeah.
expand on his answer there a little bit as well. We're taking a fairly holistic approach towards protecting what we're building here. It's not just around the IP. So as Ben was hinting at, we're also doing a substantial number of other internal developments on building this technology that we're specifically keeping as trade secrets and internal know-how. By keeping that stuff out of the IP, there will be no exposure even at the at the end of those patent periods, should we have proceeded or pursued them rather. But things like the actual construction methodology, the way we're assembling these devices and keeping Titan tolerances like we would need to build a device like this, are all very, very difficult to replicate. So it's not just IP is secure, we feel comfortable with that. We're building kind of a portfolio of approaches, including IP, internal know-how, and then, as Ben said, building all of those critical key relationships right now. So we're kind of expanding our pipeline as we move into the future, and hopefully making it a little bit more difficult for them to look elsewhere should it come to that down the line.
Yeah, I mean, I think it's really just about the rate of innovation and progress, and like it's not like we're just gonna stay at whatever we have now. We're just gonna continue that. So it is a continual innovation, continual development, and it's really just about the rate at which you progress, and how you assume that other people are trying to do what you're doing, and you just move aggressively and quickly. I think that's the main point.
Yeah, and I've worked also in sort of the hard tech industry, being a mechanical engineer, but I gotta say the same thing, that the know-how and the system level optimization, which comes from sort of the grunt work, the roll up your sleeves, and somebody has to do it, can take months and months and years. And I think one of the things that we had discussed, Ben and Patrick, over our call, the initial call, was that, back when I was working on certain tools and product lines, then I was surprised to see that steel ordering used to take 6 months and still does for a lot of components. And so supply chain itself becomes a huge part of the moat. And eventually, if you think about it, a lot of these companies like Teslas of the world, they had the first mover advantage, and then they kept moving on in the same direction. And it wasn't so easy, even with other billion-dollar, mega billion-dollar companies, other automobile companies, to just catch up. So technology is a moat, but more than that, it's the know-how, it's the operational expertise. And I think maybe in the later on, at some place, we can get into your manufacturing aspect of building the rotor with sort of plates as opposed to one monolithic steel structure itself, how it provides advantages to that. But the other sort of the follow-up question to this is, how do you compare to some of the other startups? They haven't given the names, but I think I know a couple of those. How do you compare to the startups which are modernizing the UPS system itself? So people working on, or startups working on the UPS technology, can they actually bring out the same kind of advantages and become a competitor to Revterra's FES system, which right now the UPS cannot match at all, which is the fluctuations. It has a different place in the ecosystem. But in general, what's your viewpoint on the industry itself developing on the UPS side?
Well, I guess it depends what's meant by UPS, because a UPS can use multiple different kinds of energy storage technologies to provide the instantaneous backup power. It could be batteries, capacitors, or other. Um, you know, so it really depends, I think, what's meant by that. I don't know,
So I
Patrick,
think
you want to chime in?
Yeah, absolutely. The broader UPS landscape, we would typically be referring to the chemical side of things. And I'd say that industry is trying very hard to try and come in and serve this application better. And really, they're just limited by the technologies themselves. Even if they keep making advances at an incredibly rapid rate, we don't see that any of those chemical type of systems really stand a chance when there's high power, high cycle requirements with the type of rapid, hyper volatile load profiles we see on the AI GPU side. Even when you start looking at chemistries that stray from the more traditional lithium ion, like the LTOs of the world, you expand your cycle life from something like 10,000 to maybe 30,000 on the high end. We're talking about potentially millions of cycles over just a few short years. It will be very, very difficult, as far as we can tell, for them to bridge that gap in any meaningful way. And then we set ourselves apart from all of the rotating energy storage devices out there. So firms like Active Power, in several key ways, but mostly in terms of cost, the way to implement in terms of us being instantaneously responsive and synchronous frequency, all these sorts of things. So no, I think it's going to be quite challenging for any of these other incumbent technologies to really try and catch up with what we're doing for this specific application.
Got it. And I've looked at a couple of those actually. Quite a few came across my way, and I found one or two quite impressive ones, and I may actually look into those as well. But their technologies, from my understanding, they serve a completely different purpose. So they're better suited, and that's why they are sort of placing themselves more towards the CNI market, with the commercial and the industrial side, where the challenge is not these short spikes that AI workload needs, but it's more sustained surges over a long period of time for a couple of hours during the peak hours. Whereas you guys are focused on the high frequency load fluctuations, which is very suitable for the AI data centers and semiconductor fabs, or even for the renewable grid integration. So not mainly from storage, but from stabilization point of view. But that's how they are placing themselves more on the CNI side. Um, Thanks for the answers on that. The next question comes more on the customer alignment side. It says that the memo notes that AI data centers prioritize right through reliability and cost. I would have assumed cost wasn't a major concern for hyperscalers in this race to build capacity fast enough. So could you elaborate on why cost remains a key driver for these hyperscalers, as opposed to efficiency improvement, which I think what they're referring to is efficiency of 90 to 95% for the batteries, whereas Revterra system gives 85%. So marginal delta. But if you
Well, I
could shed
think,
some light.
yeah, I mean, I think the efficiency and the cost are the same thing, right? as you mentioned, cost may not be the main issue for them. And so with the efficiency, a little bit lower efficiency translates to a little bit higher electric bill. And if you look at the difference between like 98 and 90 or something else, it's a few $1 million potentially an electric bill. Compare that to hundreds of millions of dollars um, every few years for battery replacement costs. So I think that is the driver. And then also when it comes to the differentiation, the cost is one part of it. The other um, is the value proposition. So we offer complete electrical isolation. We offer lower maintenance requirements, lower operating expense. It just really simplifies and streamlines the way that this is done at the data center. And it also just accelerates the rate at which they're able to deploy these data centers. So I would say that's also a consideration beyond just the dollars and cents of replacing the batteries, which is like a big number as well. But as you say, not as relatively small compared to the GPU cost.
Right. No, that's how I understood. And something, at a very simple level, I was, thinking about like the cost of a coffee, which is $5, as opposed to cost of, let's say, a sugar-free, which is 5 cents. Would you rather extract 5 or 10 additional percentage point savings on that sugar-free as opposed to, 50% or 95% or 90% discount on the cost of the coffee itself? So it's a relatively small portion of the obviously efficiency improvement, and cost saving is cost saving. Nonetheless, it's relatively extremely small, negligible. Could you provide some more context on your current discussions with the two main projects, not the pilots, like the renewable power data centers and the independent power producers focused on AI? Because I believe they are contributing to the 15 million projected 2026 revenue. How are those discussions shaping up commercially?
I can comment on the power quality equipment manufacturer discussion, and then maybe I'll let Patrick comment on the other one. So we've had several discussions with this group. They've come to visit us in person as well to visit our facility. They're interested in putting our system in between the essentially power coming into their data center and the load at the data center, and having it completely electrically isolate the power generation from the load at the data center. We've had several technical discussions as well with their engineering team. They've also looped in some contractors that they're working with on running simulations on a 200 megawatt data center site that they're looking at putting together. So they are very far into starting to expend their own internal resources on developing this plan with us. The first step of which would be a pilot project, and that would consist of one unit deployed to their site. And then if that's successful, they really are interested in a much larger project with us. And I'll let Patrick comment on the other one.
Yeah, really quick on that first one. The pilot project would be actually at the site of the full scale deployment eventually. So they're looking at, as Ben suggested, a multi-hundred megawatt site that we would be essentially participating in the first phase of build out in for that first pilot deployment here. So great opportunity with them. Beyond that one project, they also have multi-gigawatt level of pipeline. It's actually between two parties jointly, a data center, renewables power data center construction firm, as well as the power equipment OEM. So we see between the two of those just massive potential commercial expansion opportunity, either as partners or sales channels or whatever it might be. The other project that we were discussing here is with a large natural gas firm that is piping gas to large data centers that can't achieve a grid interconnection, either in a timely fashion or they've been rejected by the utility for a grid interconnection. We're talking about multi-hundred megawatt sites for the most part in their pipeline here. And the core issue that they're facing today is that this large generation equipment that they're using to turn that gas into power is highly at risk from this AI GPU load volatility. Some of those spikes can come through and actually cause physical mechanical damage to the generation equipment. At any point in time, if that happens, it causes a huge amount of both downtime and cost to both the data center operator as well as this natural gas generation firm. So we would, as Ben just suggested in the other application, be sitting between those two pieces of equipment, providing that true electrical isolation and also stabilizing the rest of the equipment on site there to ensure that they can avoid costs. This firm itself has a pipeline of several gigawatts of providing power to major sites, covers most of the major hyperscalers. Unfortunately, across both of these, we can't really share more specific details, but we feel quite comfortable with the fact that the conversations are moving forward nicely and represent just massive commercial opportunity between the two of them. Those are just two of amongst several other advanced discussions we have ongoing as well in this space. So we feel quite good about our pipeline as it stands today.
Got it. Appreciate the details. The next one is more on the licensing side. I'm not really sure how much that is a concern. Nonetheless, it's a good question. What does the licensing and regulatory environment look like for Revterra's deployments, given the regulated nature of utility pricing and grid operations? Do you foresee any hurdles or certifications that you must navigate, especially while navigating different states and countries?
Yeah, I mean, initially we have this first project in California. What we're planning to do as far as certification there is we're working with a group called UL. Ultimately, we will be pursuing a full UL 9540 certification, which is like an energy storage category, and there's a kinetic section in there. But for the first project, we'll be doing what's called a field certification, which is a one-off certification where they come and inspect that particular deployment and then certify it on at the site.
Yeah, I'd say that's going to be. Sorry, there typically aren't exactly regulations that would prevent us from doing any sorts of these activities. We're generally interacting behind the meter, so on the customer site as what would be confirmed as a load for that user. So it would be kind of very similar to using other UPS equipment in terms of regulatory approvals or permitting or any of that sort of stuff. The UL certification is generally to make the end user more comfortable with the safety and the kind of efficacy of the device. This is pretty similar to how it would work internationally as well. So, for example, CE in Europe, that's something we will pursue when it comes time to expand in that market. But generally, we see no major impediments that will keep us from going into these markets at a pretty good speed here.
Understood. Thanks for the details. On the financing side, what are the specific use cases or the users of capital from this round of $4.5 million? Maybe I can combine a couple of those finance-related questions because I think they all can fall into the same bucket. Looking ahead, how do you plan to fund the scaling? Will you rely on large equity rounds, or could some of it be structured as project financing tied to deployments? Same sort of on the similar term, does Revterra stand to benefit from government subsidies or grants? And the last one is, if you are expecting to reach profitability by 2027, do you foresee needing the full 100 million Series C currently outlined in your roadmap? So I think four parts to that: use of capital. Would you depend on equity only, or can you do project financing or any government subsidies or grants which you can take advantage from? And the last one is, do you foresee utilizing the entire $100 million Series C, which is currently outlined in the roadmap for 2027?
Sure. So as far as the use of funds for this current fundraise, the primary thing that we're going to be doing over the next 12 to 18 months is accomplishing these first two full-scale deployments in the field, gathering that successful testing data for the equipment. We'll be making maybe one or two hires, so that's not going to be an outsized use of the fund in terms of team building exercise. Generally, the intention of doing this raise is to position ourselves for a larger Series B raise, which we hope to accomplish in that 12 to 18 month time frame. So basically what we'll be doing here is trying to get that successful field testing data, accomplish something between 5 and 10 million in firm commercial pipeline before we do that Series B. And then that would bring us kind of to one of the follow-up questions there, which is what are we going to be doing to scale? I think the comment there towards project finance is a very good one. Obviously, equity is an expensive way to finance any of these sorts of deployment or purchasing equipment or any of that sort of stuff. So absolutely, we will consider utilizing those types of options whenever they're available to us. Most likely, that's not going to be something we can feasibly do for something on the order of 1 to 2 years, just given the status of field deployment history. A lot of these partners require a bit more extensive full deployments before they would look to do that. But the moment we do have that as an option, we can certainly look into using it. It will also kind of depend on exactly the type of project that we're pursuing and whether or not that fits into the business models of our partners that we're working with on those types of deployments as well. The other thing we might consider doing down the line is essentially using some sort of financing to offer our system on a leased basis, make it available to more customers that aren't necessarily as interested with a large upfront capital purchase. Obviously, all of the data centers are quite comfortable with that, so it's also not something we're doing right this moment, but something we would look forward to in the future. As far as the question of utilizing grant funding or other kind of non-dilutive funding, absolutely. So there are certain incentives on the manufacturing front that we would certainly look to apply to as we move into our next phase here. For the most part, though, I'd say we plan on really keeping our business model asset light as much as we can. A lot of the manufacturing will be outsourced to third-party machine shops, primarily in the Texas area. If we can avoid having these large machines on our balance sheet, we will. That being said, there may indeed be a few high value add pieces of equipment that we can use to help keep our timelines short, quality high, all of these sorts of things. That's something that we will really be exploring alongside the Series B that I mentioned just a moment ago. That fundraise we're looking at is probably something in the range of 20 plus million. Obviously not finalized at this date. But also as you suggested, Haas, in 2027 we expect to be able to reach cash flow positive. Our gross margin positive date is much, much closer than that. Actually, with units exceeding in the low single digits, we expect to be generating positive gross margins on these types of sales. So we expect fairly comfortably be able to be generating positive cash flow by 2027. And if that is the case, it would definitely do a lot of positive good in helping us potentially not need to raise as large of a Series C as you mentioned. In that model, we had that in there as an expectation, but it's by no means our only plan. And obviously, the preferable route would be able to either self-fund or utilize other non-dilutive or debt capital to help us get there in a way that makes a little bit more sense, keep our weighted average cost of capital as low as humanly possible, while also growing the business at the speed we know that we can. So hopefully answered all of those there, but let me know if I didn't touch on anything.
No, you did. I think that was a very thoughtful answer and complete, covers everything. One of the other things, Donald Trump, and during this term, he has announced that all the capex can be expensed. I've forgotten exactly for how long, but definitely for a couple of years. So we are, every company is trying to take advantage of that. You don't have to, capitalize it over a couple of years. You can directly expense it, and so it impacts the bottom line, and that's good from the taxation point of view. The last two or three things left, I think one is on sort of the vision and challenges. What excites you the most about this over the next 12 to 24 months? And conversely, what are the biggest challenges, both in the near term and sort of the medium to long term, in reaching a unicorn status? So excitement, and on the opposite side, challenges.
Sure. So I'll start with one of the things that excites me, and then maybe I'll let Ben jump in on some of this as well. But really, I think for us, one of the biggest things that's been driving our enthusiasm for the company and the product is how much customers have been doing cold outreach directly to us. This pain point is so acute for many of them that we're getting emails landing in our inbox so frequently of people inquiring about this type of solution that we know that this issue is serious and real and expensive to them, and we're building something critically important. So I think we've given you a small taste of what the pipeline and our discussions look like as of today. I am also incredibly confident that once we've got this technology out operating in the field, we'll pick up the phone, call many of these discussions we already have in place, start answering a few more of these emails. I think the enthusiasm is definitely out there, and it's something that helps get me up in the morning and stay enthusiastic about building this thing.
Yeah, and then from a slightly different perspective, one of the really exciting things about where we're at right now is that we've essentially developed this product from scratch, right? So we've done a lot of the engineering and development work in-house, and we are really on the cusp of actually deploying it to a customer and commercializing this technology. And where we are right now versus where we were a few years ago, It's really nice to see where, where we've been able to bring the technology. So me personally, and I think the rest of the engineering team is just really excited about actually getting this into the field. And from where we're at right now, the work remaining is primarily on integration. And so we're all very excited about that.
Got it. And so are we. So am I, at least. Looking at ahead, I think this is the last one. How do you envision Revterra's exit path, more towards an IPO or strategic acquisition? And I understand that most companies stay open to both, but I would love to hear which route you're targeting and what factors would make one more attractive than the other.
Yeah, well, I'll give partly the cop-out answer that you were providing there, which is that we're going to keep every possible option open. What we really are interested in doing is providing the best possible path out for everybody involved. So whatever that might end up looking like, but certainly from my experience and my kind of looking into this with our company specifically, it seems like strategic acquisition is probably most likely where this is headed. There are a huge number of large industrial equipment companies out there that this would make a very easy kind of plug into their portfolio of technologies, and we've already had fairly deep discussions with many of them quite recently as well. So there's a ton of enthusiasm for what we're trying to accomplish, and it fits neatly within several types of portfolios. It also doesn't just stop there. Potential acquirer groups include also the data center construction firms themselves, could be broader energy firms or even utility firms that are interested in owning the tech. There are just a huge number of strategic owners out there that we think this would slot into quite nicely. So I think that's most likely where it ends up going a few years down the line. But obviously, like I said, we'll keep all options open and try to generate the best possible exit for everybody.
Yeah, and this is what also attracted me to Revterra. I've always appreciated the portfolio approach to the product side, and you guys are right at the intersection of so many different industries. Whether it's the data centers, obviously, which is all about AI, then your CNI, the commercial and industrial. Whether it's the EV charging, I know EV has taken a step back, but nonetheless, it's a small component of that from the utilities point of view, energy companies, everything you just mentioned. A lot of these, sort of the bit mining companies have also moved towards supplying, data infrastructure to the AI world from data center perspective, and so those could also be in partnership. There's so much happening, and everyone requires energy. That's the bottleneck, and so I'm really excited about this one from that point of view. I think that brings us to the end of our Q&A. I want to thank everyone for joining again today. And really special thanks to Ben and Patrick, both of you, for taking the time to share your insights with us. And from my side, I'm genuinely excited. We are at Meandros Ventures about the opportunity and what Revterra represents. For our investors, LPs, a quick reminder. We are a small SPV. You guys all know this. So to make the SPV, or we are small syndicates, so to make the SPV economics work, we need to reach a certain minimum to complete the investment. So once again, I would highly encourage you to commit as much as you possibly can and comfortable with. And if you know any colleagues or friends or others in your network who may be interested, now is the time to bring them in. At Meandros, we build our conviction, through deep dives. We take a lot of time to study things, and we don't merely just follow top tier investors or sort of co-investors, even though that's always a good validation. So I'm always looking to connect with like-minded, technology-oriented investors who are also focused on the deep tech side. Happy to have a conversation offline with anyone interested. And if there are any questions, please feel free to reach out to me. And once again, thank you everyone, especially Ben, Patrick, all the LPs who sent questions in advance for making this a valuable session. You will have the recording within the next 24 hours. So have a great weekend, everyone. Thank you so much.